Okay, welcome to the BTS Beginners Trading session, July 20th. And this week we kind of want to shift the focus to the Fibonacci. Um, Market structure, which we've been talking about really since we started the group, is very important. Um, but once you get the structure down, we want to start talking about how to use that structure and take advantage of the market, you know, when it has moves. Okay. Um, there's a term in trading that you're going to hear many times. We're going to say the market is fractal, right? Fractal. Um, Fractal means that it happens, the same thing happens on every time frame. So, as a matter of fact, I'm just gonna Google this, okay? Green, orange. Okay. In Forex trading, fractal is a graphical representation of repeating price patterns that can indicate potential reversal points in the market. These patterns consist of five consecutive bars, uh, with the middle bar being the highest or lowest pattern. And I don't want to get into the bars, right? Uh, Whenever we say fractal, I want you to understand that what we're saying is they're patterns. You're going to see it again. It's going to repeat. Okay. Um, so when we start looking at the market, we understand. You see this push up, right? The market starts down here, it pushes up. We break this high over here. It's called a break of structure, right? So we should understand as traders, the market is going to pull back, right? So this market moved from this point to this point. All right. We broke this high, right? That's a break of structure. So what we should expect to see is the market to pull back, right? Where is it going to pull back to, right? It's going to pull back to go higher, but the way that we take advantage of this as traders is once it starts to pull back, we can pull out our Fibonacci, right? And we can place our Fibonacci on this chart from the swing low to the swing high, and we can get a reasonable area that we think price is going to hit before it starts to push in the same direction again. Okay, you guys understand that?
Yeah, so it needs to pull back to that area and then it's gonna turn back, going back up.
Exactly.
Okay.
Exactly.
What is fractal here? Sorry, I didn't get that part.
Fractal is the same thing happens over and over again. So
Uh-huh,
this,
uh-huh, uh-huh. Okay.
this pattern of pushing, breaking structure, and pulling back happens on
Yeah.
every time frame, right?
Okay, okay, okay. Okay.
So if you're looking at 15-minute structure, it's the same thing on a 15-minute time frame. This
Okay.
this particular time frame that we're on is a 2-week time frame. So it's a huge time frame, but the same thing is going to happen, right? The market pushed, we broke this high, now it's going to pull back.
Okay.
And once you are aware of this, you've identified a pattern in the market. And once you've identified that pattern, you now have the ability to take advantage of that pattern, right? And um, if you know how to place your Fibonacci, like I just did, this Fibonacci is giving us the exact area, right? This golden zone, the exact area the trade needs to hit before it takes off and buys again. Now, there are ways to find out where the market is going within this little area. And we will talk about that later. But the most important thing is you got to be aware that the market is going to pull back to your 50%, right? Or it's going to pull back to discount, right? If you're buying anything above the 50% on the fib is premium. Anything below that 50% is called discount. So if you're buying, you want to wait until price gets below that 50 and you can buy at a discount. You don't want to buy from a premium. It's going to cause you to lose money. If you're selling, right? If you're selling, let's say this trade pushed down, you want to wait for it to pull back past the 50% into the premium range. You want to sell from a premium uh, and you want to buy from discount. All right. Does that make sense? You guys got it?
Yes. So you don't buy from premium,
You
but
don't
from
buy.
discount.
Exactly. You don't buy from premium and you don't sell from
And then
discount.
you don't sell from discount, but from premium.
Exactly.
Okay.
So because I put this fib on this move right here, this is where price is. Is price in premium or discount? Exactly. Price is in premium, right? Because price is above this 50% mark. Y'all see the 50%? So price is in premium. The only thing that we can do from premium is take sales. If you understand that as a trader, you're going to make a lot of money. If you don't understand that, you're going to get beat up. All right. Now, it is some people, including myself, that will buy for small amounts of time during while prices in premium. But you have to understand it is a risk. It's a risky trade, right? Um, and most of the time, you'll hear people refer to this as counter trend trading. Okay.
Okay, so when would you do that?
You said, why would I do it?
When would you do that?
Well,
Take such a
okay, let's
risk.
talk about that. Um, I'm expecting this price to sell down, but price is not just going to sell down without pulling back, right?
Yeah.
So this is where um, your time frames come into it, right? I'm going to delete my my little path tool. So we're just going to look at this. On the Fibonacci, price is up here about at the 23%, right?
Yeah.
On the 2 week time frame. But if I drop down time frames to a lower time frame, right? Let's just drop to the 4 hour time frame. On this 4 hour time frame, on this leg of price, you would have had price go here, price pull back, created a new high, right? Do y'all agree with that?
Yeah.
I would even say price pulled back here and created a new high. Would y'all agree with that?
Yeah.
Now, if that's the case, then this level A right here is the swing low. Is that correct? Do y'all see it like that? Do y'all agree on the 4 hour? If this
Yeah.
if this is a 4 hour chart, you got the low, a high, higher low, higher high,
Okay.
higher low, higher high, which would make this A the swing low and this B the swing high. Now, price comes here and breaks that swing low. That's called a change of character, correct?
Yeah.
Then price pulled back to your uh, break right here and gave you a chance to enter the trade for the sell. And now price is just making lower highs and lower lows. Right? You agree with that?
Yeah.
Okay. So if you're taking a trade, you're not trading on that 2 week chart. You're trading on the lower time frames. But your setup, the setup that you're looking at is coming from the 2 week chart. It's a higher time frame setup. So, but your entries, you're entering for a sell on this time frame. Now, just like on that higher time frame, when I told you we break a swing, so we expect price to pull back, correct?
Yeah.
Well, that's the same thing that happens on these lower time frames. What I like to do is monitor my trades from the daily, right? So if I go to the daily chart, now y'all got to remember, for me, my swing low is here on the daily,
Mm.
okay? And we got a candle close below the swing low for me. For Kim, this won't necessarily be a break of structure for her. But again, I go to the line chart. This is my swing low. You see that?
Yeah.
Price has broken structure.
Yeah.
So what that means for me on the daily chart, this was a swing.
Mm.
Now, I already knew that price was going to come down and break this swing, or I anticipated that that was going to happen because I just showed you on the 2 week chart, I was expecting price to do a pullback, correct?
Yeah.
So I sold this down. But,
Okay.
but once you break this structure, remember, just like on that 2 week chart, we expect a pullback, correct?
Yeah.
Okay. So if I expect a pullback, because your question to me was, when do I buy, right? How do I know to
Yeah.
buy, correct? Because we broke structure. Since we broke structure, I can place my Fibonacci from this high to this low. And you see this green box right here?
Yeah.
I can expect for price to come back to this green box. Now, I'm going to delete my little Fibonacci. I know I got a lot going on the chart. I don't want to confuse y'all. But that green box is where I can expect price to come back to, right? And because I'm on the daily, I'm going to drop down 2 time frames. This part I don't really want to get into at this point, but I'm going to drop
Yeah.
down 2 time frames to look inside and see there's an imbalance right here that price can come to. There's also an order block here that price can come through. There's liquidity here. So my point is, I know that price is likely to buy at least to here, which is 182 pips. You see that?
Mm. Yeah.
So I can take advantage of those 182 pips because I understand market structure. I understand that we got a break of structure, and normally after a break of structure, we get a pullback. Now, how do I know price is ready to buy? Well, we're looking for a change of character, right? So, man, I need to find a path, my path key, because this is not going to cut it. Okay. In order to get a change of character, what do I need to see? Anybody? You want to see okay, when this market was coming down, guys, when this on this lower time frame, when this market is coming down, right, it's going from a higher high to a lower low, a lower high, lower low, lower high, lower low, lower high, lower low. then there's a break to a higher high.
Yeah.
That's the change of character that I want to see. Then I want to see the market pull back to let me in the trade. So again, for Kim, this is not a change of character because it didn't break above this wick. So if you guys are trading the way Kim would trade, you would wait until you get a candlestick closure above this wick, right?
Mm.
But if you're trading like me, and you're using the line chart, this line chart is telling you this was a high right here. We broke it right here. We pulled back. We broke another high, right? So you got your change of character for me.
Okay.
And now I just needed to see a pullback to get in for the buy to go up to where I told you, it was going to buy up to that 182 pips or whatever, right? Does that make sense?
Yeah, it does.
Yeah. And I get it. It's I don't expect anybody in here to be able to repeat what I just showed you. Just like the structure piece, when we talk about this Fibonacci, um, we're gonna kind of beat it into you. And we're going to keep going over it and keep discussing it because once you get it, now you just have to kind of start trying to put it together, right? It's like fitting the pieces of a puzzle together. First, you have to see it. Then, once you see it, now you have to start reacting to it, right? Um, so the market came from here, made a high, pulled back, made a new high. For me, we came down and we broke this low, right? That is a trigger for me that the trade is going to pull back, right, into my golden zone to start going lower now. Does that make sense? Now, if you are a trader like Kim and you don't recognize this right here as a break of structure, then that just means you're not going to look to enter the trade on this pullback, right? Like where I'm going to get my entry to sell, you're not going to even start looking for sales until this leg comes down and breaks both of these lows. Once that happens, then you'll be like, oh man, we broke the low. And when it pulls back here, now you'll be ready to enter the trade for a sale. So it's not a bad thing or it's not a wrong thing, right? Uh, it just means that, hey man, for me, I don't recognize this as a break. I need to see something more clear. I'll wait for a little bit longer until it breaks both of these lows and have a candlestick closure below these lows. Then I am more comfortable with taking that trade. Does that make sense?
Can I just ask? So basically, you, with your style of trading, you would enter sooner than Kim.
Well, yeah, because for me, generally speaking, I'm going to see the break of structure sooner than Kim is going to see.
Uh-huh. Okay.
But
But is that your style then more riskier than hers?
well, yeah, yeah, it probably is.
Okay.
I don't think it's any more risky, no. But she would probably tell you that she views it as more risky, you know.
Mm.
And what I would always tell people is um, if you trade like me, you have a set of rules, the same way that Kim has a set of rules. So
Mm.
every time I see this as a break of structure. Every time. Sometimes it's going to win, sometimes it's going to lose. But I'm going to win more times than I'm going to lose if I look at it the same way every time. Does that make sense?
Yeah.
So it's not that it's riskier. It's just the way it is. Um, your style, if you abide by your rules, is going to be your style. You have, I mean, if your style has an edge, you're going to make money. The edge is the fact that we see the structure break. And when it pulls back, we take that sell.
Okay.
I don't know if you guys follow, uh, but we had a discussion about a week and a half ago about EUR AUD on a call. And price was right around here. It was a Tuesday, right? You see that red candle right there?
Yeah.
To me, that was a bearish order block, and price was about to sell. And for Kim and the young lady that brought the question up, they were looking for buys.
Mm.
So I was correct, and they weren't. But it didn't matter. It's not like she bought, right? She was just looking at the chart for buys. She didn't recognize the sell. So if it
So
was
she wouldn't enter anyway, even though she thought it's gonna buy.
right,
She wouldn't
she
enter until she's secure
exactly.
according to her style.
Exactly. But if I was me trading that, I would have entered for that sell right there where that red line is, and boom. That
Mm.
would have been like 200 pips. You
Mm.
see what I'm saying?
Yeah, yeah.
So that's the difference. It's yeah, it might you might view it as more risky. I don't view it as more risky. I view it as these are my rules when it comes to trading, right? Um, I look for certain things in the market. I look for a break of structure. I look for an imbalance, and I look for an order block. If I have those three things, to me, I have everything that I need. As soon as I saw what I saw, there's an order block. There's a break, right? There's a break of structure right there that pushed down. We broke these lows on the daily, and there it
Mm.
left an imbalance. Now price traded back into that imbalance. You can take a sell right there, and now you can sell it. So Kim and them, even though they didn't see this initial sell, once it broke these lows, now they could have said, okay, now I agree with Todd. Now it's a sell. They could have got in right here
Mm.
to sell it.
Okay.
You see what I'm saying?
Yeah.
So it's not about who sees the trade first, or who doesn't see the trade at all. Once the move happens, um, you can always go back and get an entry based off of what has already transpired. You don't have to be the first person in the trade in order to be the one that's making money.
Yeah. Yeah. Okay.
Okay, so I want to go back to GU, and I kind of want to stick with GU because this is going to be the pair that we all track. Um, so I know y'all's homework was to place y'all's fib, around the swings and the breaks of structure, correct?
Yeah, but I haven't done it yet, so
Has
it's
any
coming.
yeah, has the rest of you guys have you guys looked at that homework? Hello? Hey y'all, it's hard for me to help y'all if y'all don't communicate. Anyone? Bueller? Come on, guys. Come on, y'all.
Oh, William said no, sir, not yet. Oh, in a chat.
What about you, Dan? Amila?
Oh no, my sister's not yet. We need to go through this together.
Is Melissa and Amelia your sister?
Both of them, yeah.
Okay. Donimus?
He also replied in a chat, no.
Okay. All right, that's cool. So the first thing that y'all are going to have to be able to do is uh is go through and identify your swing structure, right? So that's going to be the first challenge, right? And for me, if I had to identify the swings in this GU structure, this is really how I would have done it, right?
So basically, you are doing the homework for us
Well,
now.
I'm going over it, of course, but I mean, y'all have to understand that this is this is something that you're going to have to deal with every time you open the charts. So while I might tell you what I think, I'm not implying that you're going to think the same way that I think, right? You might identify your structure a little bit differently. And
Okay.
it's not that mine is right and yours is wrong per se, because I can assure you that Kim will not identify where I have my swing low. She's not identifying this as a swing low. She's probably a little bit further down, which changes the fact that this push down broke structure for me. For
Mm.
her, this push down probably did not break structure, right? So um, that's where you're going to have to stand on business as a trader. Because if you see the market the way I see the market and you see that we broke structure here, now you're anticipating a buy up for that 182 pips. 182 pips can make you a lot of money.
Mm.
But if you're not looking at it like that, you're going to let that 182 pip trade go. Not only that, you're not going to try to get in and sell it back down another 182 pips. So you're going to miss two trades. There's nothing wrong with that. There's nothing wrong with you missing the trade. But if you do see it, it's nothing wrong with you taking the trade either.
Mm.
That makes sense?
Yeah.
So the first thing I did was identify a structure here, right? And let me move this down because this is how I first started learning this. If I once I identify my structure, if I move this chart over here, then I can clearly see on my little diagram here that this was a change of character. So once I see that, all I have to do is go to the chart and fib from my swing high to my new swing low to get the area that I want to see this price trade back up into. That makes
Mm.
sense?
Yeah.
And remember, there are two areas on this fib that are important. This line right here that I'm drawing represents those areas. Anything above that line is the 50%. Anything above that line
Premium. Okay.
is called premium. What do we do in premium? Do we buy or sell?
We sell in premium. We sell in premium.
Exactly. This is discount. Do we buy or sell in discount?
Bye.
There you go. So if your price is down here and you're looking for sales, smack yourself. You know what I'm saying? Because that's the first sign that you're getting yourself in trouble. Now, again, remember I told you there are times you can buy from from premium and sell from discount. but most of that time, most of those times is for a short distance. Okay. So what we're going to do for you guys, we're probably not going to talk counter trend trade. We're going to talk only buying from discount and selling from premium. Okay. So when you break that chart down like this, already know anything below this green line is my discount. Price is in discount, so I should only be looking to buy. Where am I buying it? I'm buying price back to premium.
Mm,
If I'm taking a trade, if price is up here, if it's in premium, I'm looking to sell it back to discount.
mm.
If we if you stay right there, if you keep your trading right there, you're going to be successful. You guys have any questions over that?
Mm.
You
Kim's
know, I have a question.
yeah, yeah.
You know, most times I do follow the structures, the breakup structures, try to know if it's an uptrend or a downtrend. But when I place my order block for a buy or for a sell, like my demand zones or
Stop,
supply zones,
stop,
the
stop,
market just come and break
stop.
it like a piece of
Dynamis,
trash.
Dynamis.
Yeah.
I need you to explain to me when you say when you place your order block, because that doesn't make any sense to me. What do you mean when you place your order block?
Like when I place my entry, sorry, my entry.
Okay, okay, that's better. When you
So
place
when I
your
place my
entry,
entry, sorry, when I place my entry at my order block, price just break it like it's a piece of trash. Like I was like, "Ah, I did all my analysis and wait for a confirmation, but why is
so
price just breaking my
okay.
entry?
So
Yeah.
can you explain to me what time frame you're using?
Yeah. First of all, I go to the 4 hours to know if the market is trending up. Then
So
I
now,
move down to the
do you
15
have an
or 30.
example? Like, do you have markings on your chart?
Currently now I don't.
Okay. From
Yeah.
now on, and this goes for
Yeah.
anybody in this chat. Um, if you're taking trades, which we're not taking trades as a group, but if you're
Yeah.
taking trades, you need to be able to label on your chart where you're taking the trade. Hey, I took a buy, right? So do
Yeah.
you see on my chart where I say where I have full entry?
Yeah.
That's somebody who took an entry for a sell trade right here,
Yeah.
right? If you
Yeah.
don't do this on your chart, I cannot help you. I can't uh explain to you why you lost that trade. But if you give me your entry, I can look at your entry and tell you whether or not it's a good entry for that trade or not.
Okay.
Does that make sense?
Yeah, yeah.
So the do you know why this is a good entry right here? Can
Not
can
really.
can you look at this? Okay, you said not really. I'm going to show you why. Because this is a daily chart. She was
Okay.
expecting price to sell, right?
Yeah.
So on the lower time frame, what does she
Yeah.
need to see? Because price is bullish. Why
Yeah.
would she take a sell right here?
Yeah.
The only way you can take a sell is if you see a change of character,
Character.
Gotcha.
Yeah.
right? So if you go
Yeah.
to the 1 hour chart, this is exactly what she saw. She saw price go here, make a higher high. It pulled back and made another higher high, right? You see how this high is higher than this high?
Yeah.
Yeah.
And then she saw price break that swing low.
Mm.
So when it pulled back here, she pulled the trigger. She got in the trade for the sell, which is perfect. And boom, it went right down there to equal lows, right? If she sold this trade to this imbalance or this low, she made money, right? She made all these pips just because she stuck to the rule.
Oh, okay. I want to understand something. Sorry for asking. That means we should be picking entries like, demand zones and other blocks from the higher time frame.
Can you repeat that, Dynamis?
That does that means we should, be picking entries from higher time frame like demand zones and supply zones from the higher
Okay.
time frame.
So I think you you're mixing your terminology up. Um, you don't pick entries from higher time frames. You pick trade setups. Your trade setup comes from one time frame. Your entry comes from a completely different time frame.
Okay.
It comes from a lower time frame. So,
Okay.
what is her trade setup in this scenario? The setup was, hey, we just broke structure right here. You see how we break structure?
Yeah.
That's a trade setup. We break structure. What do
Okay.
we expect to happen after we break structure?
Okay.
A pullback, a pullback. So we
Yeah.
broke structure right here. Does everybody recognize that as a break of structure?
Yeah. Yeah. Clearly. That's
Clearly
a
a
clear
break of
break.
structure. So you're
Yeah.
anticipating that the market is going to pull back. Well,
Yeah.
you see this candle right here? That candle
Yeah.
right here wicked these high. That's a liquidity grab. And then you
Yeah.
get the sell, right? So
Yeah.
this sell on a lower time frame, on her entry time frame, it gave her what she was looking for, which is a break, a structure, a change of character, right? Remember, this was a swing low on the 1 hour. That sell took out that swing low, which gave her an entry. Hey, we took out the swing low. I want to enter at that imbalance. Price comes right back up to that imbalance. She entered the trade. She went in a little drawdown and then boom, it went in her direction. So her trade setup was on the 1 day chart. Her entry was on the 1 hour chart.
Mm.
Does that make sense?
Yeah. Yeah.
And it was based off of market structure. And again, we haven't started talking about entries or trade setups. Uh, but I
Okay.
know some of you have already started taking trades, which is all right. But um, I don't want to get caught up talking about trade entries and trade setups at this point. I want to keep it focused
The
on your market
structure.
structure, your swing high, your swing low, and when you break that swing low, how to put the Fibonacci on the chart. Right now, that's again, Donimus, if you're taking trades, wisdom, a few other people in here who might be taking trades. If you're taking trades and you're getting beat up, you
Yeah.
have to contact me with pictures of where you entered the trade. The same way I have right here, entry on your chart, you need to be able to write, hey, put a horizontal
Yeah.
ray on your chart where you entered that trade.
No.
Because if I see that, I can look at the structure and tell whether or not you won or lost. Does that make
Okay.
sense?
Yeah.
And
Thank you very
yeah, no problem. So on your MT4 or your MT5, it is going to give you a little number when you enter the trade. So you just make sure you go shoot a horizontal ray on your chart where you're trading.
Okay. Yeah. Thank you very much.
Nope,
I
no
clearly
problem.
understand.
Hey, what's going on, Wisdom? Hey, Miss Linda.
Yes, sir. Yes, sir, I'm here.
Hey, Wisdom. Did you take trades this week?
Yeah, yeah, I took straight on the
Did you
demo.
win?
Yeah, it was a win on this GBP.
Okay, okay.
It was a buy win, just short buy. Can you zoom in your chart?
Can I zoom in?
Sorry. Uh, on the 1 hour, so I can explain what I did on the 1 hour.
Hey, Wisdom. Do you want to share your chart?
Okay. Let me share my chart then. Okay, sir. Thank you for the opportunity. Can you see my chart, sir?
Well, yeah, it says it's coming up. It's starting the screen share. Uh, it says double click to
Yeah.
enter full screen mode. You got to double click, Wisdom. Okay, perfect.
Oh,
Ah, wisdom. I like that. I like that wisdom.
So, yes, sir. So was I got the change of character here on the 1 hour. So I bought to the high. So
Where is
this
your
to
change
be
of character
repeated there
wisdom?
because I saw that the 4 hour structure.
Wisdom. Where's your take it? Where's your change of character
Okay,
wisdom?
let me show on my 1 hour. Here,
Oh, your
I saw
market
it on the
structure
15
shift.
minutes,
Okay.
sorry. On the 15 minutes, I stopped.
Yeah, we on here.
Market structure shift too. You can call it that. Yeah.
Wisdom is very loud wherever you are.
Yeah. This was the market structure shift here. Not this one. This one was just me doing something else. This was where I got the market structure shift. Sir, can you see my chart? I got it here. Can you see it, sir? So I marked up my demand zone to buy
But
up
wisdom, you
to
had it marked
this
up
high.
before. Hold on,
But
wisdom, are you
I
there?
noticed that the 4 hour structure. Yes, yes, I'm here, sir.
Man, what happened to my? Okay, hold on.
Yes, sir.
Okay, so you had your market structure shift right here.
Yes,
You had a MSS, change of character.
yes, right here.
To me, this right here is not a market structure shift because you're in a downtrend, right?
Mm-hmm.
Can you hear me, wisdom?
Yes, sir. I'm listening, sir.
Okay, so right here, if you're gonna say this is a low, this should be a high, this should be a lower low. That's one way of doing it.
I can't see what you're marking on my screen.
You can't see it? Can y'all see it?
Yes, I
Mm,
can see it.
Okay, wisdom. See if you can see this.
yes.
You move the screen. Hold on. Let me turn it. Okay. Don't move the screen, wisdom. Can you see that wisdom?
No, no, I can't see it.
Okay, you don't see it. You say you don't see it, wisdom?
Yes, sir. I don't see it, sir.
Wow. Okay.
I can see it clearly.
Yeah, I don't know what else to do here. Let me see.
Maybe
Okay.
it's zoomed in with him. I don't know how he's. Is that through the phone you're looking?
I'm using my Chromebook. It's a Chromebook.
Aha,
So
okay.
Yeah, so you should be able to
sir,
see that.
you can do it.
Or maybe it's a bit delayed on his side. I don't know. What's his internet doing?
Yeah, maybe. So here's my problem, guys. Hey, wisdom, just hold on. Maybe you'll see it in a minute. If you're saying that this is your swing, like wisdom has it drawn up, this cannot be a market structure shift. That's not a market structure shift. That's just, it's part of it. That your market structure shift is not until price goes up and breaks a high. Does that make sense?
Okay.
You have a market structure shift when a high is broken. So if you're looking at if wisdom is looking at his structure the way he drew this blue line, then he technically should not have entered this trade until this high got broken. Now he won the trade which is good and bad. It's good because he won money, but it's bad because it reinforces negative action. Does that make sense?
Yeah, yeah.
Yes, sir.
So, wisdom, you still can't see my markings?
No, no, I can't see.
Okay, stop
Maybe you
sharing
should
your
share
screen.
it.
I'm going to pull my screen up.
So basically, he was lucky.
Yeah, yeah. And sometimes it's better to be lucky than good.
It's very dangerous. Well, Madam Kim had we 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 had a discussion on this chat. She said it was okay, and she too had
So,
the market structure shift on the.
so wisdom. Do you see my screen?
Yes, sir.
Okay.
Yes, sir.
Basically, this is what you had your structure. You said that right that this was your structure. So
Mm-hmm.
um, but you took a trade from right here. Does that make sense?
Mm-hmm.
You
Yeah.
also you also had a market structure shift right here. And what I was trying to tell you is if your structure, if this was a leg of structure, this is not a market structure shift. That's just a break of structure for price to go down. You can't get a market structure shift until you take out a high. Does that make sense?
Yeah, yeah. Oh my
So
God.
your market structure shift should have been up here where this high got taken out. Then when price pulled back, you could have got in the trade for a buy.
That's true. That's true. I was confused a bit. I forgot because there was a line I removed. I just was confused somehow. So you see, that was true.
So listen, I'm sure you saw the structure. I think you recognize this as a market structure shift in a pullback. I'm
Yeah,
sure you
yeah,
saw that, but label it on the chart is a way to ensure that you really understand what you're looking at. So
yeah,
many times we're going to get in trades, uh, you know, maybe out of boredom or maybe because we think we see something. But you have to make sure that you absolutely understand what you're seeing. And if you can't label it, then don't trade it.
yeah,
Because at the end of the day, trading costs money. And for the mistakes you make, it costs you money. And many people don't have thousands of dollars to give to the market.
yeah,
Unfortunately, I gave thousands and thousands of dollars to the market, um, just because I didn't understand. But you have
yeah,
the opportunity to learn without spending thousands of dollars, and it just requires a little repetition, right? So while you won that trade setup, you were lucky that you won the trade setup because you didn't have it, you didn't understand that structure, or you didn't label it like you understood it. Does that make sense?
yeah. Yeah, I didn't live in like I understood it.
Okay, so I do agree that this is a buy, right? I believe price is going to buy. I think I explained that pretty well at the first uh, part of talking about this GU setup. What we have to do though is if if you're a trader who is going to look for your structure shifts on the 1 hour time frame, you need to be able to identify a structure on that 1 hour time frame. If you're a trader who's not going to identify structure shifts until they happen on the 4 hour time frame, then you need to identify the structure on that 4 hour time frame. But you have to be consistent, right? So if I'm trading based on the daily chart setup, I personally want to use the 1 hour chart to set my structure. And all I would have to do is this right here. I would have to say, oh, there's a swing on the 1 hour. Boom. There's a swing on the 1 hour. Boom. Maybe this is the swing on the 1 hour. Boom. So once I get this part down, now whenever price comes and breaks this high, whether that's this wick right here or this right here, if that's a break for you, then you just wait on this pullback and you can get in for the buy to go up. But you shouldn't do anything or shouldn't be looking to do anything until one of these up moves breaks this high. If this was your structure level. If your structure level came down to here, and then you identify this pull as a high and this as a lower low, now it's a little different because maybe you can enter after price breaks your structure here and pulls back here. You see the difference? So if you had this as a lower low and this is a higher high, this is a lower low, and then this as a higher high, this is where you got your market structure shift. Now, once trade pulls back, you can enter for a buy here, and now you're in profit. The only thing that matters here is how you see structure, how you as the trader is looking at structure. Does that make sense?
Yeah.
Yes, sir. Yes, sir.
Okay. So if
So can I just ask, so according to this structure, if you look for a buy there, where will you then exit the trade when it comes all the way to that green zone up there?
that's a great question. That's a great question. And my answer to you is yes. Why is it that green zone? Why do you think I'm getting out when it gets to this green zone?
Well, you marked it, eh?
Well, of course I marked it, but why?
Is it something with imbalance or
Well, okay, let's talk about that.
okay.
Remember, um, it's not, it is the 50%, but remember on this daily chart, I told you that this move down broke structure for me right here.
Uh-huh, yeah.
So this area, all I did was fib from this high to this low.
Oh yeah, yeah.
And this area is the what zone?
Golden zone
The golden zone, which means premium is up here, discount is
and
down here.
discount down there.
I'm
Okay.
taking this trade from discount, buying
Up.
it up to premium.
Okay.
Does everybody understand that?
Yes, sir.
Yeah. Quick
Can I
question.
just
Quick
can
question,
I
Todd.
can I also ask, would you exit as soon as it touches that green zone, or would you wait?
Well, yeah, if you don't know what you're doing, you exit. I personally, I looked in my zone to find an area of interest for me, which was this imbalance. I know.
Imbalance. I knew it somewhere there.
Yeah. So for me, this imbalance. Remember, if you got an order block,
Yeah.
an imbalance, and a break of structure, I told you guys that price is always going to come back, right?
Yeah.
You got an order block, you got an imbalance, you got a break of structure here. See how price came back? Price came back to that imbalance.
Mm,
You see that?
yeah.
It's going to happen again. It's going to happen again. Order block, imbalance, break of structure. Even though price fell all the way down here, it's going to come right back to that imbalance.
Okay.
So Todd, I have a question.
Yes, sir.
So as you see, like when you go to like the newest like candles, if you can go back to before, because you went back a few days, like the newest candle on the graph, you see how you said you're waiting for it to go back to that golden zone. Since it broke the last, I guess, like high or low on that line, wouldn't it continue on the downtrend if it broke that like previous low, I think, or high? Or is it
Okay.
going to reverse back? I'm just trying to figure out what's going on here. Because normally that would continue the downtrend if it broke that, I
If it broke
guess.
what? This line right here? Let's go
Yeah,
back to
that,
the
no,
daily.
no, I mean like the next, like, I mean like the previous, like, high on the, to like the day, a daily right there. You see right there that, yeah, swing, there he is, that swing low. If it broke that, wouldn't it continue on the down?
It is going to continue down.
Okay, that's what I was trying to figure out because I'm
After
wondering,
after it buys up, it's going to continue down.
okay, so how would you know it's going to continue buying up if we're thinking it's going to continue down? That's what I'm trying to figure out. Like,
Okay.
wouldn't it just continue tanking or I'm
Well,
just trying to figure out
yeah, but okay. So remember, what do we look for to tell us price is going to change the directions?
a swing, sorry, a shift in structure, no?
A market structure shift,
Yeah.
which is what we were talking about right here.
Hmm.
On the 1 hour chart, it gave you a market structure shift, right? This is a lower low. This is
Yeah.
a lower high. This is a lower low.
Hmm.
All of a sudden, we break that high.
Okay.
That's a
Yeah,
market structure shift,
and then it went up a little bit. I see that.
right? You pulled back, you could have entered the trade, and then you would have got this whole profit right there. Now and when it pulled up, it broke this last high.
Okay, I was starting to understand. So it's gonna pull back to a fib zone of like which one was it, 68 or 50
There
or
you
something like that?
go. There you go. It's gonna pull
Okay.
back again
So
and go
yes,
higher.
and that's gonna be your entry when it's at
Yes.
that 50 or 68 zone, right?
Yes.
Okay, I understand now. Thank God.
Yeah. And you can take this
I get it.
trade
I
all the
get
way
it.
back up to
Okay.
that imbalance that I was just telling the Johnny about. So it is a little complicated when you're new, but
No, I understand. That
you
makes
know,
sense.
when you get
Okay.
this drilled in your head, trading becomes more simple. It's still hard to control yourself, but trading itself, understanding what's going to happen is more simple.
Hmm.
Sorry, can I ask? I thought you look when it comes back to 78, or no?
78, 88. So listen,
Yeah.
um, the discount zone or the premium zone is going to be the premium zone. You still can make a choice on whether you want to trade from the 50 or the 78 or the 88.
Ah,
Some
okay.
people will not take a trade unless it hits the 78. That
Ah, okay.
means those people won't get many trades. They will
Mm,
win a high amount of trades. They just won't take as many trades.
mm,
Some people will take a trade if it goes to the 50. They're going to win some trades and they're going to lose some trades. They're going to lose some trades because price is going to go to the 50. It's going to bounce and then it's going to go higher to the 78. So they're going to get stopped out, right?
mm,
Unless you protect the entire green zone from the 50 to the 78, and sometimes that's a lot, that's a big stop loss, you're going to lose some trades. So that is why I always tell you as a trader to look for your imbalance. If you have
ah,
an
okay.
order block with an imbalance that broke structure, the market is going to go there. It's going to go there.
So
Mm,
what you're trying to say is that, when we find our imbalance, instead of putting the entry at the other block, we'll put it to the imbalance close to the other block, right?
Yes, most definitely. That's what I would do. Most definitely.
Okay. Okay.
Okay, Satel, do you take how do you take your confirmation? Do you take confirmatory entries or aggressively?
I can barely hear you, Wisdom. You got to speak up.
I say, based where when you want to take a trade, do you wait for confirmation or you just take the trades aggressively?
Well, I think we all have our own confirmations. So, like for this setup, right? I don't know if you were on the Tuesday call. I knew that this trade was going to turn around and buy. On a Tuesday, I told the people, "Hey, this trade we're at the zone. We're going to turn around and buy." At that point, I'm just waiting to see the change of character. The change of character is my confirmation. Does that make sense?
Okay.
A change of character is my confirmation. Does that make sense?
Yeah. But here, the change of character happened around the demand
Of
zone,
course. It
but
happened
you
in
take
your zone.
trades
If you look
off.
over here, this is a zone. So
Yeah.
your change of character happened right in your zone. It's that is confirmation. I mean, I don't need any other confirmation other than that for me. But when you say, do I wait for confirmation? I think all of us have our own version of what we think confirmation is. I don't need three or four pieces of confirmation. I just need to see the change of character in my zone. Does that make sense?
Yes, sir. Yes, sir.
Just a quick question, Todd. When you're fibbing, is it fibbing up or is it going to be fib further down? I'm just trying to, when you find that entry. That's what I was trying to, I was a bit confused on that
I'm
for this
sorry, say
one.
it again.
For fibbing, like, would you fib that on the down or on the up for
You
the
mean
entry?
from here to here?
That depends if you buy or sell, and
Yeah,
Well,
but if it's gonna retrace back, it's gonna go down a little bit, right? Then back up. So I was trying to see where the fib would be for the entry. Would you fib it downwards and then look for those
okay,
zones
for a
or
buy
in the
entry,
negative?
are we
Ye-
talking about the buy entry?
Yeah, we're finding that good buy entry because we know it's gonna go back to that zone, like you
Okay,
said, the golden zone going to back up.
so
So I'm
let's
just trying to
talk about
see.
that.
Hmm.
Once you got this change of character, right? So if I
Yeah.
was looking for an entry at this
Okay.
change of character, I would have fibbed this up move. I would have fibbed from here to here and look for an entry, which probably would have gave me. Let's look.
Yeah, if you could show us, I'd really appreciate it. Let me just see.
So this price came all the way back just past your 88. So you could have entered at the 78. You could have put your stop loss above this swing low, right? You would have had to protect your stop loss would have been, I don't know, 27 pips. You'd had a 27 pip stop loss.
Which is good, I guess. Okay, so the target would be those negative 61. Okay. See that.
For me, this is my target. Negative
Yeah,
61 is a guide. This is my target right here. This imbalance.
that balance. Okay, I see what you're talking about.
imbalance. Ooh.
No, I'm aware of that.
So my risk reward will be 7%.
Would you take profits along the way? You just wait till it's
No,
that down
I'm not taking
takeout.
no profit along the way. This is where price is going.
Okay, you just wait.
This is where it's going, bro. Like, you know, if it doesn't go there, then I lose that trade. I'm not taking profit along the way.
I understand. How would it look for the fib from the, I guess, the latest candle? Would you just go down, Rob?
What's that?
How would the fib look from the latest candle?
What do you mean the latest candle?
As in like the right now, the day right here, would you look for a like a fib on there or would you like would you fib the previous like months like you showed us that one trade where it like broke market structure went back
Well,
up
I
kind of.
think okay. Let's talk about the fib because
Yeah, I'm just trying to see like if you look at the chart today, would there be something to, I guess,
well,
start trading for?
okay.
That's what I'm trying to say, for example.
What makes you break out the fib? Why do we even break out the fib?
For pullbacks and retracements.
Okay, so we can't get a pullback until we get a BOS, right? So this up move, we got to break a structure right here, right? Then the market comes up here and it starts going sideways, right? Then we get this liquidity grab. A liquidity grab on the daily chart for me is always the market telling me I'm about to tank, right? More confluence was that we took out the high of the 6-month candle. But at that point, I knew that I could fib this move, right, from this low to this high, and I could sell this trade back down to close this imbalance. Why could I sell the trade to this imbalance? Because you have an order block, you got a break of structure, and you have an imbalance. The market comes right down and slams that imbalance. Then it buys up about 100 pips after that. You see that?
Yeah, I see that. It went back up.
115 pips, which I told people before that happened that it was going to happen. Then the market keeps selling. How did I know it was going to keep selling to break this swing low? Because my trade setup came from a much higher time frame. Does that make sense? On this time frame here, what do you see?
It broke the swing low.
You see break of structure right here.
Yeah.
Right? This price came up and broke structure. Now the market went sideways. Then you get that grab of liquidity, that wick, so you know the market is about to sell. So you fib from here to here, and you get your golden zone. So I know that I'm selling from way up here all the way down to this zone. I just have to find out within this zone where price is going to come to. Does that make sense?
Yeah, I'm starting to understand it. Yeah. So you're just trying to see that's I guess that
Yeah. So
demand zone.
once I fibbed and I got my zone, I already know that price is selling. I know it's selling. All I had to do was go find an entry. And we talked about how Fo got her entry because on the 1 hour time frame, price broke structure. Let's look at it. So if you were labeling your structure on this 1 hour time frame, this is how I would have done mine personally. So I would have had higher highs and higher lows, right? So this would have been my swing low because we made a higher high right here. Y'all agree? So once we got this break, once the market gave me that break, that's a market structure shift. You see the imbalance right here?
Yeah, I see all those candles.
As soon as price came back, you get your sell entry and it's off to the races. Does that make sense?
Yeah, no,
Now, I'm selling from right here all the way down to that zone that we talked about. I'm just going to keep going up time frames because I want to drag this line down. Even though we got our entry off that 1 hour time frame, I'm selling all the way down. All I'm doing on those other time frames is monitoring. This is where I think the market is coming to right here. But all I'm doing on those higher time frames is monitoring price to make sure it breaks my swing low. Right? I'm in this trade and I'm just allowing price and time to do its thing. I know it's going to pull back every now and then. But as long as it continues to break these lows, right? Then I'm cool. I expected to pull back when it breaks a new low. So on this daily chart, I had identified my swing low. right? Once it breaks that low, I'm going to go to the weekly chart. And I'm going to say, hey, man, on this weekly chart, here's my swing low. I'm going to move this down. Because after it breaks the daily, for me, it needs to break this weekly swing low. And again, me and Kim are a little bit different on how we draw up our swing lows, but this is my swing low. You see how when I had the line chart, this is my low right here.
Yeah, I see that.
So for me, after we pull back, this is my next target for price. And as long as price breaks it, I'm in good shape. Then I want to see it break this swing low. And then I want to see it come and break this swing low. Because ultimately, this is where I think price is headed, right here. And then I'll be looking for a change of character for a buy. Does that make sense?
Very cool. It does make sense.
Okay, and I know now I don't expect y'all to be able to regurgitate this stuff. Okay, I want to be able to focus on understanding why we are even breaking the fib out. Right. The only reason that I wanted to break the Fibonacci out and fib this down move right here is because I got a break of this swing structure. Right. When this swing low for me, because see the market pulled back and made a higher high, which made this my swing low. So when this price came down and broke my swing low, I can break out a Fibonacci and fib from the high to the low to get my golden zone. Then this market turned around and gave me a change of character on that 1 hour chart. Y'all remember that? It gave me this change of character.
Yeah.
So that's how I got a buy entry and price is starting to head up. Any questions? So I want y'all to be patient about trade entries and whatnot. And I get it. We all here because we want to be good traders. If we focus on understanding our structure, our swing highs and swing lows on let's say the daily chart, right? If we get our daily swings and we can label those properly, and then we realize, hey man, price has broken our daily swing point. Now we can put the Fibonacci on it and we can see price come to this area. So if you look at the charts like I do, you should mark up your 50 to 78, your golden zone, right? Because for me, we broke structure over here on the daily chart. And I expect price to buy up to this area, right? And the only way that this is going to make sense to you is if you do this on your charts, right? On your daily chart, you label your swing points. And when you get a break of structure or a change of character or market structure shift, however you're going to label it, you have to put it on your chart as a market structure shift. And then you fib and find the area that you think price is going to pull back to. And if price pulls back there, that's like super confirmation. This is going to give you a superpower. Your chest is going to stick out. You're like, yeah, I got it. Once you get this, the path to you achieving financial freedom is well within reach. Well within reach. I'm not saying that this is all you need, right? Because at the end of the day, if you don't have self-control, then that financial freedom won't it won't be there, right? You're gonna have to always be in control, right? But that can be a work in progress. If you know what you're supposed to look for, that is the other piece of you achieving financial freedom. All of us are aware that we have to have self-control. We have to live, breathe, and function in an environment of total control. But after that, we have to understand what we're looking at. We have to be technically sound. We have to understand where our swing points are. If you mark your swing points on your chart, then you have to wait for those swing points to be broken before you take any action on that chart. Does that make sense?
Yes.
This is very important, guys. If I'm telling you, if I'm labeling my chart and I'm telling you that this is how I see price action on this chart, if I'm telling you this, then I shouldn't be in a trade until this pulls back. Why do I say that? Anybody? Why shouldn't I be in a trade until this pulls back?
Because that's kind of an internal and it's going bullish, going to the supply zone.
I shouldn't be in a trade because my market structure shift does not happen until this high gets broken. You see that? Are y'all with me?
Yeah. So the
Yeah.
high got broken, it pulled back, and that's when you,
Yes.
yeah.
If so, and this is why this is so important. Some of you guys will not label the chart like this. Some of you guys are going to label every little movement over here as a high. And there's nothing wrong with that. The thing that's important is some of y'all are going to say, hey, this wick right here is a high, Todd. That's a high up there. And I would say, okay, if that's your high, then you cannot enter a trade until your high is broken. So you don't have any trade set up. You're not getting the trade set up until price goes above that high. And there's nothing wrong with that. It just means you're later to the party than somebody else. You see what I'm saying?
Yeah.
If you don't use wicks, like I don't use those wicks, wicks are cool. But my change of character is a lot further down. Because for me, this is how I see the structure. That move up right there is a break of structure. It's a change of character. This pullback right here is your entry. And now you're off to the races. And it's not that my way of seeing it is the right way of seeing it. My way of seeing it is just my way of seeing it. And my trigger was this push up that broke this high. This pullback said get into the trade. My swing low is right here. So that's the low that I'm going to protect. If you waited for this move up in the break of this high, then you got to wait for this pullback for your entry, and your stop loss is going to be at this low. Does that make sense?
Yeah. It's basically just a different time of
Yes.
entry.
But it is the difference is you as a trader picking your structure points and sticking by them.
Yeah.
All right, who has questions? All right, y'all. If y'all don't have any questions, y'all have the homework from Kim. You have the examples that I just showed you. I want to encourage you guys to go and look at your charts and mark your structure points up, okay? I would, if you're marking your structure on the daily, you're looking for your entry keys on the 1 hour chart. Does that make sense?
Yeah,
Yeah.
yeah, no. That
Yeah.
that makes a lot of sense.
The
If you're,
lower time frame for
yeah,
What
the end.
about what
yeah.
about if you're marking your structure on the 4 hours?
If you're marking your structure on the 4 hour, you're looking for your entry keys on the 15-minute chart. Now, I'm just going to tell you from my time in trading, I think it's much easier to go daily 1 hour than 4 hour, 15 minutes. That's just me. Many people use the 4 hour and the 15-minute chart. I'm not saying you can't do that. I'm just telling you, um, I think the moves that you get from that daily are going to be much more significant than the 4 hour, 15 minute. There's nothing wrong with either of those charts, but in my opinion, that daily is much better and is much more lucrative than that 4 hour is. All right, you
So
guys
Todd,
have any
so
questions?
Todd, yeah,
Yeah.
I was gonna say Todd, in a sense, would you say you're kind of more of like a swing trader since
I'm
you're
definitely,
looking?
I am definitely more of a swing trader. Now
Okay.
here recently, I've been working on more of a scalping technique or my own way of scalping, but I'm definitely a swing trader, right? Uh,
We-
if you guys want to trade those lower time frames, it's going to be the same information. Remember when we started this class today, we looked up the definition of fractal. Those of you who weren't here at the start, when I post this video, you'll see we looked up the definition of fractal. It means it's the same thing is gonna happen on every different time frame. So it's going to be the same pattern that happens over and over again. The same way you see a change of character on every time frame, you're going to see the same thing on every time,
mhm.
right? You're going to see the order block, the imbalance, and the break of structure. You're going to see the market go back to that imbalance. You're going to see it on every time frame. Even the 1 minute chart, you're going to see it.
I understand. Okay. So if you do say the 4 hour and 15, that's more or less a day trader's kind of style, like somebody who likes to take profits in the day.
I, you
Would you argue
know,
that or no?
well, I'm going to leave that to other people to label it day trader or whatever, because I think once you enter a position, nobody knows how long it's going to take for that move to play out. You can
Mhm.
get in a move that go 300 pips in 2 hours.
That's true.
Most day traders don't dream of 300 pips. So I think your setup is going to be based on a time frame. So what do I mean by that? We're on a 4 hour time frame. If you're on a 4 hour time frame, you would have saw this break of this 4 hour low because that's your swing low, right? The price pulls back and makes a
Mhm.
higher than this one. Y'all agree with that?
Yeah.
So this is your swing high on the 4 hour. This is your swing low. Price comes down and breaks your swing low,
Yeah,
trades back up into your imbalance. This would have been your four
yeah,
hour entry. And
yeah,
where would you have taken this trade? Maybe you have taken
mm,
this trade to this imbalance, right?
yeah,
Maybe you would have gotten out right here.
yeah.
So let's see. This trade would have netted you about 220 pips, which is fine.
Wow.
Somebody on the daily like me would have been looking for this low to get broken. So we would have taken it down to this low. We would have also been looking to buy it back up to take it lower. Neither one
Hmm.
of them are wrong. It's just you're looking at a different set of things. You
So
know
how
what I
many,
mean?
how many pips is that for like the people that's taking the trade from the daily?
The daily is much more because I showed you what I'm looking at. If
You
you're
know,
looking,
Mr. Todd, like the fear I'm having is that, most times I feel like the 15 minutes, like taking interest on the 15 minutes moves faster than the, daily.
okay, but Donna's
Yeah,
fast. Fast. You know what happens fast in life?
yeah.
What? What happens
Um,
fast? Accidents and destruction. I'm very serious. I'm very serious. Think about it, man.
yes,
You
that's
can
true.
you can quickly ruin your life, right?
Donna, chill.
You can quickly overdose. You can quickly uh, do something immoral and ruin your life quickly. But it takes time to grow riches. It takes time to achieve the body that you want. You got to go put in time in that gym. You got to be
Yeah,
uncomfortable,
yeah,
right? You
yeah.
don't inherit God's kingdom in 2 days. You have to have a track record, brother. You understand
That's
what I'm
true.
saying? So
That's true. That's true.
the good things in life take time. And I'm
Yeah,
sorry, guys. Like if I could give you my knowledge of trading in 2 sessions, I would do it. But it takes time. So I don't want us to get caught up on how long it takes. I want us to get caught up in the process, right? Uh,
yeah,
I heard something on an Instagram video today that I always say, right? What I always ask people is, hey, do you want to be a successful trader? What are you willing to give up? Are you willing to give up your time? Because that's what is going to be required. Are you willing to give up your whatever you love, right? You have to be, if you're not willing to give that up, then you are not going to find a level of success that you can achieve by doing this. What I'm breaking down for you guys is the opportunity to name your salary. You understand what I'm saying? You know how right now we all have to go to somebody and say, "Hey man, can I get a job?
yeah,
How much are you paying me, sir? Ma'am, how much are you offering me for this job? You getting $10 an hour, you getting $20 an hour. Okay, thank you. No, I'm offering you the opportunity to make $1,000 an hour, to make $6,000 an hour. Once you
Wow.
once you build your trading account, there is no limit to the amount of money you can make. So
Mm.
you're telling me that a 15-minute move is going to take a shorter amount of time to pay you than a daily move? The answer is yes. It's yes. However, once you have a $30,000 account and you can put 30 or 40 lots on a 1 day move, you might not have to take another trade for a year because
Mm.
you might make $200,000 on one trade.
Wow.
You see what I'm saying? So don't worry, guys, about the speed of the trade. Worry about if is the trade technically sound. So I don't want to jump on my soapbox, but y'all see this setup, right? Or maybe you don't see the setup, but I want you to notice here you have a move up that breaks structure. You see that? Does
Yeah.
everybody see that structure break?
Yes, yes, I see it. It's right
Yeah.
there.
Now, do you see this imbalance?
Yeah.
Yes.
I've been telling y'all every time the trade is going to come back to the imbalance that broke the structure, right? Haven't I told y'all that?
Hmm.
And I know some of y'all don't believe. Diamonds, you don't believe me, huh? But I'm going to prove it to you, Diamonds. You see this right here? You see this?
yeah, yeah.
I'm going to hit my shift button. So the market
Okay.
came from right here, and then we got this huge
Yeah,
push, and we broke structure right here, right? You see how we broke the structure?
Yes.
Where did this market fall back to? Where did it fall
Mm.
back to?
And imbalance.
that
The
imbalance.
imbalance. Yeah.
Then it takes off again and creates another imbalance,
Wow, wow.
break structure again, and it keeps going
Yeah,
on. So for
yeah,
somebody
yeah.
like me who sees this on this daily time frame, I knew up here where it says exposed entry that this price is coming back here. How many pips is that?
Wow.
That's all.
Six.
That's
You know what I'm saying?
662 pips. Yeah,
Now, if you can if you have more insight than me, then how many pips is this?
Oh, yeah.
Jesus Christ.
You see what this is right here?
Yeah,
Did we break structure?
yeah.
See, y'all think I'm playing. I'm
Wow.
showing you what the chart is set up. You either see it. What is this right here?
Imbalance.
Did we break structure?
Imbalance.
So you can't be scared, right? I can show
Mm.
you this on a 2 minute chart. I can show you it on a 3 minute chart. Donovan, I
Yeah,
sent you a link the other day to ICT.
yeah, yeah.
On if you look at that ICT, and this is a little bit off topic, but I'm gonna show y'all anyway because I think this is very powerful. No, I just want to show them. I'm not going to play the video. I want to show you from a chart on slide 3 of that mentorship. This is where I learned to trade, right? This is the trading uh, mentorship that I watched and the trading style that I took. All right, can y'all see the screen?
Yeah.
Okay. Everything that I told y'all, I want you to look at this. Look at how the price is coming down. You get an order block right here. You get a
Yeah.
break of structure, right? We broke this low, and you got an imbalance, right? Price comes right back to that imbalance before it sells, right? It didn't break that low, but it still sold. That was your trade setup. You got an order block right here. You got to move up. We broke structure. You see how we broke structure right here? This next candle, where does it go?
To the imbalance.
Imbalance.
And takes you right up.
Yeah.
Now we break structure right here. We got an order block. We got an inbound. We break this.
Yeah.
Where does price go?
The imbalance.
Balance.
Now, I want y'all to understand something. This is not a daily chart. This is a 2 minute chart. 2 minutes.
Hmm.
Mm. Wow.
Price is fractal. You're going to see the same thing on a 2 month chart, the two
Chat.
week chart, the
Chat.
1 day chart, the 4 hour chart, the
Or chat.
15-minute chart. And
Wow. Wow.
if y'all are paying attention, price comes up. We break a high. We have an imbalance. Price comes right to that imbalance. We break structure. We break this structure, right? There's an imbalance right here. Price comes up. We break this structure. There's an imbalance. Price trades into this imbalance. We didn't trade back to that imbalance. Price comes back up. We break structure. Price trades into that imbalance.
Balance. Wow.
Now it comes back. Where does this price fall to?
Imbalance.
That imbalance.
Imbalance.
And it trades back up. Guys, if you listen to what I'm telling you, I promise you,
I'm gonna be rich.
you're going to listen. I can't promise
Yeah.
you riches, but I can promise you if you control yourself, there's not a limit to the amount of money that you can make.
That's
Make.
good enough for me, Todd.
Bro,
That's
this is where it's at, man. Like this is how it works. It
Saying
doesn't
in
matter what
saying
time frame. I challenge any of you, I challenge every one of you who are on this call today to go look at any chart, any time frame, and disprove what I just showed you.
Thank you very much for this wonderful knowledge.
This is amazing, and I
is
totally believe
no.
you.
Yeah,
No,
it's
no,
all in
no.
there,
This is
man.
amazing. I've seen, I've seen imbalance played out several times. Like it's just like the reality in the market.
Yes.
It's
No,
amazing, and you can see it's always just doing the same thing.
it's doing the same thing. The market is fractal. So
Mm,
all you have to do is be able to label your swing points, right? Your swing highs, your swing lows.
mm,
Put that Fibonacci on there. The Fibonacci is going to give you a zone to look at. So from this low to this high, this Fibonacci is telling me, hey, look inside this green box. Where are your
mm,
imbalances inside that green box? There's one right there. There's
amazing.
one right there. So
Yeah.
I know that that's where price is coming.
Mm, mm. Wow, I think this is the best session until this point.
Well, trust me, there are many, many more sessions. And I, we're going to reiterate the same information over, guys.
Okay.
I don't expect y'all to memorize everything that I'm saying here, but the same information is going to be shot at you week after week after week, right? If we understand these simple things, right, you're going to be able to make unlimited amounts of money. Now, it's just the frustration in that is I told you this week you're going to be able to make a lot of money. And many people are going to focus on, oh man, I want to make that money, but they're not going to focus on the process. You
Mm,
Mm,
can't make any money if you don't go through the process, guys.
that's it.
I
yeah.
promise you, there are going to be some frustrating times. If Forex doesn't make you cry, you're not doing it right. I don't mean cry figuratively. If you don't cry real tears, you're not doing it right, man. That's the bottom line. Forex is going to introduce you to that demon inside of you, that greed
Well,
demon.
Todd, I'd rather cry for Forex than for a man, you know?
Well, there you go. There you go. We've all cried over the opposite sex or the people that we loved or whatever. But we're going to cry with Forex because Forex is going to show you how you do not have control of yourself. You all think that you control yourself,
Mm,
but you don't. Your fear and your greed control more of you than you think.
mm.
That's facts. Oh, I've been there for sure.
Yeah. So
I've been there.
I don't want y'all to think that this is some easy process, but I do want you to understand. I just show you the blueprint of that market. And every one of you can look at that chart and see what I told you is exactly the truth. That's exactly how that market moves.
Yeah.
So if we can control ourselves and only trade what that market gives us to trade, and we're showing you how to go about finding those trade setups. Hey, when we break your swing points, then you look for a pullback. It's going to pull back to an imbalance, and then it's going to sell. And then where is it selling to? An imbalance, right?
Mm,
It's going to sell to those break points. The market leaves those points because it knows it has to come back.
mm. Awesome.
All right. I don't want to take up all y'all Sunday. I appreciate y'all for hanging out with me. Um, I'm going to post this video once it uploads. Hopefully, it won't be corrupted. But,
Please, please, this one is so good.
well, yeah,
We appreciate you, man. This was
Yeah,
good
we really
stuff.
appreciate you.
Fantastic stuff today,
That's
man. I learned a lot.
excellent.
This imbalance thing was big, big, big. So appreciate you for that. It was a good
Yeah.
knowledge Sunday.
Yeah.
yes, sir. So yes, look, we're going to go through this every week. So I don't want y'all to feel like y'all are getting left out. Like Kim is doing a lot of extra stuff with y'all, which is awesome. Um,
We appreciate that
I
too.
just don't want y'all to take for granted the time that's put in and the effort that's put in to get you guys to understand. So whatever you do, please put the effort in. And if you don't understand, don't sit there quiet. Like don't be mum. Say something. Reach out. Send a DM, whatever. Uh, we will try to get you guys to understand, even if we got to do a one-on-one. You know what I'm saying?
Yeah.
This
Mhm.
can be an awesome thing for you and your family and your friends, right?
Amen.
Oh,
So
Mhm.
yes. Amen.
the ability for you guys to retain the information is very important.
Yeah.
So please, please don't sit in the back if you do not understand. You got to say
Yeah.
something.
Thank you very much.
Yes, thank you,
Thank you,
Todd.
Todd. Seriously.
Thank you,
Awesome.
Todd.
All right,
God
guys. I
bless you.
appreciate y'all's time, and
Appreciate you.
I see y'all
Appreciate
in
you,
these
and
market streets.
yeah, I pray God keeps on giving you
Blessing
more
you
knowledge.
and
Appreciate
protecting
it.
you.
Yes, sir. Appreciate it.
Yes.
Appreciate it.
Yeah.
Thank you,
Yeah.
Todd.
Thank
Thank
you.
you.
Thank you.
Thank you so much.
Bye,
Thanks.
y'all.
Bye, guys. Much
Bye.
love. Thanks.
Bye-bye.